What a carnage. AU Financials down 40% in 2 days. Quest Corp down 20% in last 2 days. Sandeep Tandon, last time when we met, you said oil had bottomed out. You were of the view that we were nearing a classic bottom. Post that, markets have fallen another 15 to 20%. How does one figure out what is right and what is wrong in this market? This market is telling you that the sooner you run and the sooner you liquidate, the more money you're saving.
So when I met last time, I indicated that we are closer to bottom, and definitely if you look at from the global perspective, we are definitely in the elevated walls environment, and the volatility across the board has moved, which means something has changed. See the employed walls of most of the asset class. We have not seen employed walls of crude like 350%, gold remaining around 105%, silver, gold around that levels. It's something extraordinary, which means something has definitely changed. So we used to talk about a well destruction phase in 2020, but the way it will unfold is also very disturbing. So I think the way we look at the market from the current levels, I think something has definitely changed. So the strategy which we used to talk about on buy and hold from a longer term perspective, I think we have to, many market participants has to review their strategies, because these things will not work at the current level. So definitely instead of buying on dips, the way global markets are unfolding, it looks like it becomes sell on rallies from a longer term perspective now.
So, Sandeep, right now we are trying to figure out where the market will bottom out. And once market bottom out, then what should one do? It's all nice to say that it's time to buy the panic, this shall also pass. But I keep on reminding the optimists now, and even I was one of them, which is that in 2008 when the crisis happened, it was a man-made crisis because of a meltdown in financial assets. Right now we have to deal with a natural crisis and a man-made crisis which is happening in oil. So in a man-made crisis, if markets can fall by 50%, when you have two crises, why markets cannot fall more than 2008, which is another 25-30%?
So I agree with you, and in fact we are very vocal about the climate changes. In fact, in our book also we have talked about the next crisis will not be man-made, it will be natural crisis, but we never thought it will be anything like this, okay, but which was more linking with the climate change, which we are looking at how the magnetic fields will change. But given the current background, what we are seeing is that definitely the fear index or the risk aversion data points are even significantly higher than the 2008. So definitely, if I have to call it, is a global financial 2 which has started, and now we have to compare these data points with 1987. Okay, unfortunately, many option data and some of the stuff which we track are not available from those days. So it is something up to that extent is unfolding. So if I have to go by the Rallies Walls data, now we are approaching 1987, which is the second worst phase in whatever in 100 years so we look at, except 1929. So the benchmark will change. 2008 will no more be remembered as a GFC sort of thing. Now GFC 2 has taken over, and it's the comparison can only compare with 1987. That's a data point which you have to look at, and in that time also market corrected nearly 53-55% in a very short span of time. So something like that is unfolding. But we also have to keep in mind that employed walls will not remain elevated for a very long period of time. It typically tend to spikes and then correct significantly down. But in last 10 or 12 trading session, we are saying it has been continuously remain elevated. So that is what we have to see when the walls will start drifting down, stability comes back. My personal sense is that I talked about last time also that by tomorrow, that is the Friday, on higher side it should bottom out. I still believe maybe by tomorrow or so, or maybe Monday on a higher side, I think one round of bottom should be in place in global market. It is very interesting. If I have to talk about when I met last time, I talked about the way dollar index and ADXY behaved. Now you look at the dollar index has moved to the next level. Okay, typically USD JPY, which is typically tend to appreciate when you are in the risk off environment. Okay, and it is actually reverse is happening. So JPY is actually depreciating. Okay, so in last 5 or 6 trading session, if I have to say, something unusual in unfolding, which has broken down all sort of correlation which used to work in the past. Okay, and we have to look at much closer macro right now. And if you look at even the crude point of view, let's talk about the yields have bottomed out. Crude, yes, it came closer to 26 level, which was the 2016 bottom, and then trying to spike back to nearly 25% return, then again corrected. But I still believe like yields have bottomed out. Crude is also in a last leg of bottoming out. From a near term and mid term perspective, I'm not talking about from a longer term perspective, because that's not the horizon we have right now. So if multiple asset class, even gold, which was considered to be safe haven, when the crisis happened, even you will see a sell off in gold, and we have seen platinum corrected 50%, silver corrected steeply. I expect maybe closer to 1400 levels or so. Gold should also bottom out, and that can happen in next few trading sessions. So once we see one after one, each and every asset class giving you some sort of capitulative move, then you can expect some sort of bounce back, which can be equally sharp. But for us, what is more important, whether you want to, how you view that bounce, whether you want to add at those levels or you want to book profit. That is the stand we have to take. I think it will become sell on rallies.
That's a very important point, Aisha, what Sandeep is talking about. Right now what we are trying to understand is that how much more markets can go. The previous levels have been broken. There would be a level at which markets will bottom out, Aisha. It could be 5% here, 10% here, nobody knows, and frankly, we should not get there. Then what do you do after that? Do you see a situation where all the Indian retail investors who buying their SIPs, will they come back when they start nearing the averages? Most of the SIPs are deep in the red. When we reach a very normal level, will the SIP selling start? And we've seen that happen in 2008 when markets fell, all the SIPs went negative, and when markets normalized in 2011, there was a continuous selling by domestic institutional investors because they were getting redemptions for 2 or 3 years because everybody wanted to get out. And that's the fear, Sandeep, that okay, markets will bottom out, granted, this week, next week, today, tomorrow, we don't know. What happens after that? I mean, we may get a 5% relief rally, 10% relief rally, but post that the supply is only going to intensify and increase. I think Sandeep didn't hear my question. Sandeep, would you like to respond to this point that, right now we are taking a lot of pride in the fact that domestic institutional investors are getting flows and SIPs are intact. But once markets stabilize, my question, Sandeep, is that once markets stabilize, what are the chances that the SIPs which currently are deep in the red, the minute some of the break-even points are, once those SIPs and those domestic investors, they reach some break-even points, there could be a mad rush for them also to exit?
So when you really look at from the retail mindset point of view, it is our observation that retail player don't come and book losses, okay? But definitely you can, if this sort of trend continues, okay, I definitely expect the SIP inflow should come down significantly. It may not happen on immediate basis, but you will see the real impact coming in terms of inflow maybe down the line a quarter or so.
I'm just scanning through the list of losers here, and just let's go back to the YTD change in the market. And Reliance, it is the ultimate heavyweight in the market, and Reliance is now collapsing. Reliance is now really collapsing, and it is down more than 35%. A 1600 rupee stock has almost become a 1000 rupee stock. Nifty has slipped below 7900. We've recovered marginally from the day's low, but that's no consolation. I mean, there's no guarantee that markets will not come back and stabilize. Okay, Sandeep Tandon, what is your view on Reliance and ICICI Bank? These are two stocks which in a sense are heavyweights. They both represent different ends of the economy. One is global, second is local. Do you think till the time a Reliance or ICICI Bank do not stabilize, we are in this free fall shaky zone?
So instead of commenting on individual stocks, I like to say that, we have not seen any classic sign of capitulation happening in the banking space, which clearly means that capitulation has not spiked up to that extent which is required for a bottom of financial stocks, and this is not the case for India. We believe that outflows are happening and massive redemptions are seeing in globally financially, because that's the one sector which will be first impacted if something goes wrong in the global economy. So I think from last time also I mentioned that we need to avoid financial from these levels. These are grossly overowned stocks, everybody owns it, and so is the case with, I also believe, with also on the Reliance side, was one of the most hated stock in 2019, and then gradually a lot of funds bought these names. So I'm, given the background of crude volatility and given the uncertainty which is happening, I like to avoid even that also. So slightly more cautious in these names, because I don't think worst is still over in these names, where we continues to remain positive, which we talked about, like pharma or utilities company, and up to a certain extent consumption names. So these are the three areas which gives us comfort to build our portfolio or switch from the existing names.
Sandeep, I must confess, I've never heard you so bearish, but I guess, this kind of a market is turning the best of bulls into bears. But Sandeep, just to the point that you were making about this being a sell on rise market and how things have changed from the last time you spoke with us. For that, Sandeep, you have to now really train your mind that, I'm not going to make profits, but let me just try and recover my cost, right? Because, profits, if you wait for that, that's going to take a long time to come.
So I'll put this way, ki definitely we were, for last many years we have been talking about the 2028 to 2020, you'll remember, as a top for global equities, okay? And but we never thought the pace of fall which we have seen, okay, this is something which we cannot even visualize in our wildest dreams. Something like this can unfold, which we have not seen in our lifetime, okay? So I'm purely going by data. I'm not trying to change opinion. Okay, if some data point changes, when we see like in 2008, and I'll give you a classic example, in January 2008 also we saw capitulative move happening around 22nd January when the first fall happened, okay, and that fall was not, that capitulative move was not respected, and then we have seen continuous correction happening throughout the 2008. We used to talk about a difficult 2008, but turned out to be a disaster 2008. And if I go by the similar logic, this situation, what we have seen in last 10 days is much worse than what we have seen in 2008. So obviously something has changed, and it is better to recognize that change much earlier than be late from a longer term perspective. So I would like to change that opinion. Definitely we were talking about a wall expansion phase, but this sort of pace even I have not visualized, and that's the reason what we thought it could be a very gradual topping process and people will start sucking inside because the walls remain high. But this sort of move has disturbed everybody, and now obviously most of the portfolio globally, people are sitting on huge M2M losses, okay, and obviously the mindset changes when you're running a huge portfolio losses, okay, the mindset changes. You like to see, when I like to cut down my, whenever I get an opportunity, I will prune my exposure. So when bull market doesn't happen with that. So if you are typically in the bull market, then people tend to have a positive M2M. Today we are sitting on massive negative M2M, which will lead to build pressure on every rally. That's why I'm saying now the call has to be sell on rally rather than buying on dips. And sector rotation will be very, very key.
That's exactly what my follow-up was to be, Sandeep. That you have all this cash, that is, if you, make it to your acquisition cost in individual stocks. And then what do you do with that money? Because, the way things are right now, it seems that the world is going to be sitting on piles of cash for some more time to come, besides maybe a few allocations here or there. Where is it that you deploy the money when the first signs of recovery actually come in?
But if you really look at, the fear is so high right now that people will not be in a hurry after seeing this sort of massacre. People will not be in a hurry to deploy these cash, because the fear is not about just the losing your wealth, is a fear related to your life, which is there in the deep subconscious mind with most of the large investors whomever we talk. And that is something which is hurting, Okay, so don't expect that a lot of people will now be in a hurry to participate. People have done some amount of bottom fishing right from 12,200. Even our own expectation was that it will not fall below 10,300. That's a scenario even we were looking at. But from 10,300 to whatever 8,300 now, or 8,000 or below 8,000 levels. Okay, so I don't think people will come in a hurry. Okay, and even if you want to participate, I think then the sector focus should be far selective, rather than saying I'm going to average out my financials, or I'm going to average out my mid caps names where we are stuck. I think that strategy will not work. So we have to be very, very prudent in selecting our stocks or the sectors, even from the average perspective.
And would you say that whenever the market recovers, it'll be essentials, you know, the daily goods, things that you cannot do without, will they recover the first?
But definitely, but I am not saying any sectors, or like if you really look at in the wealth destruction phase which we are in right now, all the expensive stock which was supposed to be classified as a safe zone, people used to buy, you know, their ROEs was very good, they were grossly overowned, but people were saying the growth which is coming. I think those are the names which I will like to avoid. Okay, so some of the stocks which has beaten down significantly has value. Maybe if I have to take example like ITC or Marico, you know, I'm saying Godrej Consumer, generally we don't like to talk about stock, but I'm saying they are not that expensive. Okay, they have beaten down up to that extent where dividend yields are significantly high, and these are daily requirements. So these are the some of the names which I think people look for opportunity. Maybe some of the utilities company which has beaten down significantly. So I think the stock selection becomes a very vital at this stage, rather than saying that, you know, okay, expensive name or with the quality name which you used to talk about has corrected 40%, so is a brilliant opportunity. Keep in that mind, these are still very expensive and they are grossly overowned. And if we are looking at the redemptions happening, which is the case happening globally right now, we are seeing emerging market and developed market are facing massive redemptions. So one has to be very careful where all those names which are predominantly owned by FIs, anything which is very skewed towards FI holding, one has to be very, very cautious in the current environment.
All right. Thanks for joining us, Sandeep. It was great to get a perspective from you, you know, sounding the voice of reason, and also being very cognizant of all that is at play currently. So great speaking with you this morning.